Well, oil prices are surging, especially since Russia's invasion into Ukraine on Thursday. During an early Asian trade on Friday, Brent crude oil futures was once again above the $100 mark, rising to $101.12, while U.S. oil rose to $94.73. Now, previously on Thursday, the 24th of February, Brent crude settled at $99.08 per barrel, very much nearing the $100 mark. To discuss more on the situation surrounding commodities following Russia's invasion of Ukraine, we are joined by the CEO of ICDX, Mr. Lamon Ruthten. Hi, sir. Thank you so much for joining us today on Jakarta Movers and Shakers.
My pleasure.
Right. So, of course, this is a very worrying situation. Many lives are on the line, but the global economy is, of course, also being affected by this. Oil prices are surging since Russia's assault or invasion into Ukraine. Now, could you explain to our viewers the reason behind this, the surge in oil prices, and will the surge in oil prices be long-term, in your view?
Well, you have to keep in mind that we have been, for the past 1 year, in a situation of what they call a commodity super cycle. There have been too few investments in oil, in metals production. And if you look over the past 1 year, oil prices already increased like 75% until about a week ago. But the tensions in Russia and Ukraine have accelerated that increase. 75% in the past 1 year, 50% in the last 2 months, 10% in the last week. Basically, because this is against this background of a already serious supply constraints, yes, you can expect this price increase to continue for quite a long time.
Right, so quite a long time. Do you foresee that maybe in the months, or is it going to continue this year until the end of the year? Any sort of?
I would say perhaps as much as 4 years.
4 years.
You have a trend of price increase. Of course, the trend is not a straight line. Mm-hmm. It goes up and down, but the trend is upwards. And right now, it has gone up quite steeply upwards. And if the situation in Ukraine worsens, you can again have a very steep slope. But do not expect that even if this crisis is resolved peacefully, to the extent that you still can do that now, yeah. do not expect that oil prices will go back to, let's say, less than $80. I mean, we have that general economic theme of commodity super cycle.
Right, so we are still in that super cycle. So it will take many, many years before it goes below $80 per barrel. That's what you're saying. Okay, sir.
Yes, in any sustainable way, yes. Yeah.
Okay, so now other commodities are also surging as well. Could you talk about the effects of specifically this geopolitical incident on other commodities, yes, which are more affected?
Yeah, that's a very good point. I mean, people talk about oil and energy, but in reality, the role of Russia in metals like nickel and copper, and the position of both Ukraine and Russia as exporters of maize and wheat is very, very significant. And you can expect the sanctions to hit harder on metals than they do on oil and gas. And the impact on the grain sector really is because of the logistics, because maize and wheat are exported to the Black Sea. So that's the area where there's now fighting. So you can expect prices of grains to go up. Yeah. Because maize is used as animal feed in China. China will therefore replace maize partially by soybeans. So you will see soybean prices going up. And that will have, for example, a direct impact on import prices here in Indonesia for sectors like the poultry producers, because chicken eats a lot of soybean meal. On metals, of course, it is good for, I mean, Indonesia has a couple of really big mining companies, and perhaps that's why your stock market has been quite stable. But of course, it's quite bad for all the companies that use metals in their manufacturing process. So on balance, yes, there will be sectors in Indonesia that will benefit of this unrest in the world economy. Prices will be up to their benefits, but there will be also significant sectors in Indonesia that will suffer.
Right, of course. And sir, this situation in Russia, in Ukraine, this assault on Ukraine by Russia is, of course, very worrying. And should investors in Indonesia be worried, though, because we're seeing a lot of movement into safe haven assets?
Yes, well, there are two issues. One is volatility. A crisis leads to volatility, and the volatility it's much easier to rapidly lose money. So it is a more risky environment to invest in. The other factor is that traditionally global unrest is bad for stock markets. So if you are only invested in stock markets, yeah, you probably should worry, because if this crisis continues or even worsens, that is really not good news for stock market investors. Now, what we are seeing is that many stock market investors invest also in gold and in commodities. We have seen the volumes on ICDX really increasing because gold is a safe haven. Normally, if there is global unrest, it's bad for stocks, but it is good for gold. So we are seeing a really good gold market these days.
Okay, but you were mentioning about price volatility previously. Now, volatility in prices is something that's been happening in the past few months, also in Indonesia as well. Now, we've seen in recent months commodity prices are often determined abroad, though, because Indonesia possesses many natural resources in key global commodities. Like I said, those prices are often determined abroad. In your opinion, how can Indonesia have more of an impact on the price of commodities, for example, like CPO, especially as Indonesia is a major supplier of many commodities?
That's really a very good point. And as a foreigner living in Indonesia, I mean, I find it hard to see that Indonesia is a price taker for so many products where it is really a very important global player. For CPO, it's very simple. Indonesia was too slow. Malaysia moved faster to create an exchange for CPO, and they therefore are now the global market for CPO. For the other products that Indonesia is very big in, the traditional exchanges are primarily in London. And we have seen that for tin, we have been able to take back that price-making role. ICDX got a mandate a few years ago to be the mechanism for the export of Indonesian tin. Before we got that mandate, Indonesian tin was sold between 5 and 10% below global prices. And now what we see is that the tin sold to ICDX is sold at a price somewhat higher than the world market price in London. So that really shows you that if you are a price maker, you have market power, that you can get better prices. And now, of course, the very important commodity that everyone is talking about is carbon credits. Indonesia has an enormous potential as a producer and exporter of carbon credits from forestry projects. And Singapore is working very, very hard to become the dominant price maker for carbon credits. So if Indonesia doesn't move fast, it will be a price taker for carbon credits, even though it has the potential to become the world's largest producer.
Okay, but
it would be unfortunate.
Right, but we are running out of time. We have about 1 minute left, but I just want to get your perspective on this. The situation between Russia and Ukraine is a very complicated issue because Europe is reliant on Russian oil and gas, so it's difficult to weigh in some of the sanctions. In your opinion, do you think Western countries will sanction Russian oil and gas sector? If they do, what kind of impact will have globally and perhaps to Indonesia as well, sir?
Well, it's clear that Germany has prevailed so far in the discussions. Germany doesn't want tough sanctions on Russian oil and gas yet, because it is still winter in Europe, and supply disruptions will really hurt German consumers. It may change if Russia breaks the rules, the global rules, even more than they've done so far. Then the German government may be forced to have tougher sanctions. But until now, the oil and gas sector is less affected than you might think, because Germany would shoot itself in the foot by taking tough measures. If tough measures are taken, that will have a big impact on consumer price levels, because oil is used for transport, so all prices will be affected.
Okay. Of course, this is a very complicated situation. Let us hope that things develop in a better way in the next few days. But Lamon Ruthten, the CEO of ICDX, thank you so much for joining us and giving us your insights today. Thank you, sir.